Okay, so the plan going into this morning on the S&P 500 is that we have a 30-minute supply zone at 27.79 and a half. If price enters this zone, expect supply to outweigh the demand, and price should reject this area once these orders get filled in the supply zone. Now, my target from the supply zone is that we have a used 1 hour demand zone, so we have a demand imbalance at 27.14 and a quarter. I usually don't leave used zones on my screens anymore, only because it goes against our concept of unfilled orders sitting at a demand zone. But what I really like about it is that, let's say on Thursday, price sold off into this demand zone, it worked, right? But what is interesting to me is that we rallied all the way up because of poor job numbers. So market sold off, right? Everybody's selling, and price enters a demand zone. Then they release terrible job numbers, but because we're in a demand zone, the market pops. So this creates another massive imbalance. So we have a demand zone, right where my cursor is, inside a previously used demand zone. So we have two demand zones stacking on top of each other. Now, this should act as a strong magnet and a key area for us to hold. If we don't hold this 1 hour zone, we have daily demand at 26.45 and a half. Now, what you have to understand is that we are in an uptrend. So in uptrends, I look to long at demand and take profits at supply. So if price moves down, I'm expecting retail traders to sell or short something inside an area where there are massive buy orders sitting at and an area that we use as a demand zone. So price coming down, I'm looking for this 1 hour zone to bounce. If this 1 hour zone does not hold, we have daily demand down here. And if we get a nice reaction, we should have unfilled orders become filled, and we should get a nice bounce out of this zone. I will not short at any supply. I will only look to take profits because the bigger picture is an uptrend. We're making higher highs, higher lows. So obviously we're in an uptrend, and you don't want to short at supply. If you're shorting at supply, you're going against the trend. It's a counter trend trade, and the chances of it working out are much slimmer than taking a long position at demand. All right, quick little update. So the market rallied in pre-market, and we rallied right into that 30-minute imbalance, and price rejected it pretty fast. It didn't give me a good entry point, especially that the market was not opened. So we're selling off about 40 points from the highs, but it rejected pretty perfectly. So now the market is really just balancing out. I do not trade in balanced periods. So I wait for market to hit an imbalance, then I take a trade. So the next closest imbalance is this 1 hour zone, like I mentioned. So when price comes into the zone and we do get a reaction from buyers, I will take this long. But we need to get price to come down there first. I won't trade anything in between these two boxes. Everything in between them is just noise, and it's where the market is balanced. So you have market participants just agreeing on price. I wait for imbalances, and I trade based off of those imbalances. Okay, so even though we're in this 1 hour zone, we cannot hop in long blindly. We sold off pretty hard in the morning, and yeah, we are in this 1 hour zone, but you have no confirmation of buyers stepping in down here. So what I do is I look for certain candle structures. I'll either look for a certain chart pattern, or I'll look for a higher low, anything that's indicating to me that buyers are stepping in. Just because price entered a supply or demand imbalance, you cannot hop in blindly. Like I said, you have to wait for a reaction for the market participants. Are buyers stepping in down here, or are they not? Right now, we have no indication, so we need to wait for solid confirmation, and we could put our stop loss at the lows. Okay, so what I am liking here is that if we do make this higher low, and we do break the 24.50 area, which I'm going to put a stop limit order, which means is that if price does come above that level, I'm going to get filled. What I like here is that on the hourly chart, we have a nice lower wick indicating buyers are stepping in. So on a higher time frame, we have a wick, lower wick, which means buyers obviously stepped in at the bottom. We are going to create a higher low if we do break above my buy limit stop. And on a 15-minute chart, we have a solid basing looking candle inside demand. So if we do rally up and price does come to the upside, and I just got filled, if price does come to the upside, this will be a solid demand zone inside of another demand zone. Now, also what I like is that the past couple of days, every dip that we've been having has been getting bought. So if you look on an hourly chart, we had a dip that got bought. Next dip down here gets bought up, right? The dip on Thursday with the job report, we dipped down, got bought up. So pretty much every dip has been getting bought up. Yeah, now look at this hourly candle. It's a nice green candle with a nice lower wick. So we did create 15-minute supply up here. And like I said, supply is going to be areas where I'll be looking to take profit. They're not going to be areas where I will be shorting. In a strong uptrend like this on a higher time frame, you long at demand and short and take profit at supply, not vice versa. So what I think is going to happen is we're going to rally into this 15-minute supply. We're going to have to take profit in here. It's going to be a take profit zone. We're going to hold in here, and then we're going to make another leg up into this 30-minute supply zone. And I think that's where we're going to close going into the end of the day today. So I think, like I said, this 15-minute supply is just not going to be a trend change. It's just going to be an area where we have to take profits. I'll update you guys on my next move. Okay, so price made a nice move from my entry, and now we're pulling right back down. And we're pulling down into what I said was a 15-minute demand zone that formed if we were to get the rally at the 11:15 candle. So we did get that 11:15 rally. Price is now pulling back, if you look at the top right chart, into a, hold on one second, go 5. Price is pulling right back down into a demand zone. So what happens is price rallies up, and it will pull back down into a demand zone so more orders can get filled that did not get filled from the origin move up. So I just got in long another 5 contracts. I'm in now 15 micro e-mini contracts. My stop loss is a mental stop loss below the 27.11 area. And my profit taking target is going to be this 30-minute supply zone. If this 15-minute zone, we ignore it and we do not reject this zone. But the first roadblock is going to be this 15-minute supply. So I do have a valid area where I'm going to stop out if the trade goes against me, and I do have a valid area where I'm going to take profits if I am right on this trade. You need to have a trading plan. All right, price made a nice move from my second add position. We're coming now into this 15-minute supply zone. We have no rejection yet. But I'm up pretty nicely, so I'm just going to protect myself. I'm going to put a sell limit. I'm going to sell 10 of them. Okay, I have a sell limit. I'm just going to take profits here because I did make a nice profit so far in this push up, and we are in supply, so any minute price could reject this and price can come down. We do have demand zones stacking up on other demand zones in an uptrend. And when this happens, you're going to have profit taking. So price can come down out of the zone. And I want to just protect myself with at least cover 10 contracts so I can take my profits here. And I'll let the remaining 5 ride up, hopefully into my target at this 30-minute supply above. But let's see if I get filled. I just sold 10 contracts. Like I said, we could potentially blow past this zone, but you have to take gains when you have them. The market could turn any second. So if you're not constantly taking gains in areas where the market can possibly turn, then you can possibly have winners that are going to turn into losers, and you will not find consistency in that. So I just protected myself, took out 10 contracts. I have 5 remaining, and I'm just going to let the 5 remaining contracts ride. We can blow past the supply, but we'll see what happens. Okay, so what I don't like is that it looks like we're running out of steam here in supply. Like I said, we're still making higher lows and higher highs, so it is in an uptrend. But it looks like we're running out of steam in supply as I just get filled my last 5 contracts. I don't like how we have this nice uptrend and no real pullback down. I'm comfortable with my profits here. I just think that the supply is we're gonna run out of steam and we are gonna pull back potentially to my entry point. And I don't know if I want to sit in this move up. It is lunch hours, so things are going to get choppy now. So I'm comfortable with profits here, and the supply is not really strong, and the supply is really not showing anything. But this is the first time we made a lower high on a 5 minute chart. 15-minute chart looks like we're starting to base out with a basing candle. And I don't know. I just think we're running out of steam here. So I'm comfortable taking my profits. I was 15 contracts. I made $1,162 straightly from supply and demand imbalances. So if you know how to read them, you can buy when prices are coming down and you can sell when prices are coming up.